What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up here on the left. So as always, we have our broad market, our core list of companies that we're always watching, of which NVDA is reporting earnings on Wednesday. It's the last one of the pack. And then I've got 7 trade ideas to share with you towards the end of the video. Many of those ideas were recommendations from our Discord members. So if you want to join the chat and talk with myself and other traders, definitely check the link down below in the description, along with all of our other resources. That being said, the market continues to do absolutely nothing. We've seen no rally, no crash, and currently there is still no trend. Jumping right into our SPY weekly chart, talking about candle structure and location as we always do. Obviously, our hammer here is very similar in terms of psychology to the prior week, but location is different. So still, lower wick indicating that buyers did step up and defend the lows there. In terms of location, right, it's completely inside of the prior week's range. So we do have a lower high and a higher low. Basically, if we actually undo that and talk about the overall range, so the 2-week range here, and once again, split it up into thirds, just like we did last week, we've closed once again right at the edge of the upper third, right? And that has to be more bullish than bearish. If it was bearish, we would have closed in the lower third or at the edge of the lower middle third, right here. So because of that, weekly chart still has to look more bullish than bearish, especially with these longer lower wicks. If we remember the support trend lines, nothing has really changed there. Sort of sounding like a broken record. Didn't get into this one. We can draw this one in like this. Just, maybe we barely got into it sideways through time. And then the most short-term trend line, this one here, we did technically violate it once again, but we've closed back above. So from a trend line perspective and just weekly perspective in general, not much has changed. Let's break it down to a daily chart with some levels here to talk about some scenarios into the upcoming week of trade. Because again, as we go sideways here, we need to be open to scenarios and not locked in to one direction or another. So this is the range that we really focus on. We've seen the look below and fail once again. We top ticked the 418 here on the full rotation back to the top end. And as the chart currently sits, I want you to at least observe where we are in the overall range. And what do we always say when we're smack in the middle of a range, right? It's a 50-50 shot, whether or not you go higher to the top or lower to the bottom. So here are some scenarios that I'm watching out for into the upcoming week of trade. If we take out Friday's low, I'm not really looking for the short, but I am looking for price to come down below, potentially fill the gap from 411.71 to 411 the whole dollar, and then find support at the bottom end of the range. It's simple, right? If we get there and we start to see inverted head and shoulders, do something like that, there's a reversal pattern. I would take that long. Maybe we see a double bottom. You take out this neckline here, go higher, there's your long. What would I watch for on a daily perspective? Any sort of hammers that form down here at the support area. Of course, I wouldn't want the wick to go all the way down here to 407, but hammers around this area would certainly be interesting as well for reversals over that high of day the next day to potentially take it long, right? So those are the scenarios I'm watching out for here at 410, not taking the short for the ride down to it, but rather looking for the long if we were to get there and form some sort of reversal pattern. If we were to give it up, right, say we just no stopping at that area, not really placing too much importance into the 50 SMA this time around. We have touched it twice now in a very short proximity of time. Wouldn't really place too much emphasis on it the third time around. They sort of lose their luster, right, as you touch them more and more in short-term proximity. So for me, the focus would have to be on 407. Now, why do I say that? Because if we do something like this will just give us a quick and dirty way of determining, are we going to hang on to a higher low from that weekly perspective? So not necessarily looking for a bounce at this support trend line. It's very weak, just drawn in with these 2 data points here. But if we remain over 407, over this support trend line, we technically still have a higher weekly low. Now, if it breaks and we go lower, I would be watching out for this, right? 403.40, top of the gap to potentially fill down to $400.67. And the only sort of short I would take in this range is the potential gap fill if we see some hot and heavy selling, right? Internals really have to confirm that for me to get interested in that, but really watching for support at the bottom end of the range. Say we never get to the bottom end. The only long I would be interested in here would be a retest of 418 and for that to break, in which case we have a bump in the road as we've discussed at 420.73, but really looking for the all-time high and the pre-market true all-time high up at 423.56. We know those generally do not tend to hold as the true all-time high of any given rally, so that is the ultimate upside target for the upcoming week of trade only if we take out 418.09, right? We can consolidate underneath here, and that's fine. That would be building the case for the potential long above 418. So those are the scenarios I'm watching out for. Another thing I want to make your attention to is the fact that we did break this resistance trend line, right? We could have drawn this in early on in the week. Here was Friday, right? Here is Monday. Could have drawn it in here on Tuesday when we clearly backed off, right? And we did break that back to the upside now, which is a slight edge to the bulls. Again, with the higher lows, with the weekly being bullish, our sectors, as we discussed in the midweek market update, being bullish. I am slightly leaning, in favoring the bulls here. But again, do not forget that the market is going sideways here. And just because we have slight edge to the bulls, it doesn't mean that it can't continue to go sideways and just chop people out. The last thing I'll leave you with here on the SPY daily chart is just look at this grouping of candles versus this grouping of candles, okay? And what I'm getting at here is the volatility in the marketplace. It's certainly here, and I don't think it's going to go away until we cleanly break out of the range either higher or lower, okay? So be prepared for volatility. I do think all of the targets we've discussed are on the table with the current state of volatility. 400 psychological, definitely on the table, and new all-time highs, definitely on the table if we get going in either direction outside of this range. Jumping over to our Qs now, we can tell that this is a much different story. Obviously, we have resolved sort of this horizontal level that was the all eyes on level last week. And I don't think anything's changed. I still think that this has to be the all eyes on level here at 326.20 because, we broke it to the upside, sure, but now we're back testing it, okay? So if this holds as support, just like SPY, I'll give you a couple scenarios here, only looking for the long over Friday's high on a move back higher, right? If we take that out, sure, you can target 334 the whole dollar, the bottom end of this range here. Maybe, look for that fake breakout high. This is where I'm sure a lot of longs got trapped. So look for some selling in this overall range for that overhead supply to sort of want to get out break even up to about 336.50. If we accept and hold into this range, again, just based on this nature here, you have people here probably wanting to get out break even. They're sick and tired of holding through this chop. They want to wait and be patient for the break. I would expect just an overall choppy time if we move up into this overall range. Okay, that would have to coincide with SPY obviously moving higher towards that blue line we had, which is the true all-time high set in that pre-market session. To the downside, say we give up the 326 area, I wouldn't really be looking for the short until we get down to the top of the gap, maybe consolidate a little bit, and then I'd just look for the quick gap fill. Okay, that's like a day trade, very short, very quick, snappy move that, there's low liquidity in there. That would be the short that I would take. If we move lower, sure, you can hold a piece, but watch out for the support trend line. If it breaks, obviously filling up the triangle here to our next gap below from 315.81 down to about 314.91, about $1 gap there as well. And again, just like in SPY, we have volatility in this marketplace. Look at the ranges we've experienced here versus this tight and controlled action that we had. So there's no reason why this or this isn't potentially on the table for this upcoming week of trade. I think we could, easily make it to either of those targets. The question remains, though, what happens at 326.20? Just like in SPY, I will also say that we do have a resistance trendline break. We have our 50 SMA tangled up there as well. Do note that it's going sideways, right? Or slight edge to the bulls, right? Going higher. But when the 50 SMA is going sideways, that's when you really know you're in a sideways overall trend. And last but not least, we have IWM, Russell 2000, and our small caps, perhaps the most sideways of them all. Look at this 50 SMA right here, pretty much smack in the middle of the range, right? If we do something like this, as we know, IWM has sort of been stuck and not really resolving the 222 area, which is the middle of the range here, for quite some time. So it continues to be choppy. There's no clear direction in the IWM. Again, 50-50 odds. You go higher or lower off the 50% mark. If you go lower, watching for support at 215 and support trendline after that. Again, maybe if SPY moves lower into its bottom end of the range, you find support here in the IWM. That would be a good sign for the potential reversal, right? If we go higher, you're looking at 227 the whole dollar, and then the resistance trendline after that. Anything above 230 would be the next target. Again, with a sideways choppy market like this in the IWM, I'm not really sure how prices will react on a break of either the support or resistance trendline. Will it be an explosive move in one direction or another? I'm not entirely sure. So just something to keep an eye on. Again, using this more as a benchmark as opposed to an instrument to outright trade. So if you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel. We're almost at 10K subs, which would be a very cool YouTube milestone to hit here. And at 10K, we will be giving a course away. So it's a technical analysis course. If you don't want to wait for the giveaway, it's only 27 bucks. It's not going to break the bank, but it's packed full of information. Check it out down below. But if you're interested in the giveaway, get us to 10K and stay tuned for updates on that. Jumping into Apple, obviously we don't really have a clear trend here, right? You could argue that it's higher. Our highs are technically getting higher and our lows are technically getting higher as well. But with the day up, day down action, sloppy, right? So we failed to resolve this 126.64. I think the focus into the upcoming week has to be on a break over 127.90. Call it 128 the whole dollar to have a little bit more confidence, right? And trade it up whole and half dollars intraday levels that form towards our 131.17 prior support, then turned resistance here. To the downside, only really looking at scalps for shorts if we take out the 2-day lows here at 125.12. If we flush pretty much 125 the whole dollar, I wouldn't really focus too much on the 200 SMA, but rather the low of the week in here. Just like with SPY, when the moving average is touched in such short proximity of time, it sort of loses its luster, right? So really looking out for this low as opposed to the moving average at 122.88. After that, you have another low in here to target, 122.25, and then a gap fill underneath. With volatility in the marketplace, sure, if we get some serious sell side activity, it could be on the table, but as it sits right now, expecting some choppy action, looking for, again, the day trades over and under these levels, nothing really extensive or swing worthy. Moving over to Netflix now, two ways that we can look at this chart. You could either say double bottom here at 478.13 and we go higher back to the top of this range. Moving averages, the 200, the 50, they're all going to be there, right, at the top end of the earnings gap down range. Or what you could say is we failed, we had a look into and fail outside of that range where this overhead supply started selling, and now we probably chop and go sideways. The critical level to watch out for would be this 493.85. So Netflix not really seeing a whole lot of decisive action here. I wouldn't really be interested in the long over Friday's high to trade up towards this because, again, this is all overhead supply. Wouldn't really be interested in the short either because there's really support just below us right here. And obviously with the double bottom, that being the neckline, it should, in theory, if this is a true double bottom, hold on any sort of back test. So Netflix, pretty choppy one, not really seeing any clean trades right out of the gates. Jumping over to Tesla, you can see that this one is trying to resolve, excuse me, its 200 SMA, which again is losing its sort of luster now that we've traded through it a number of different times. So not really focusing on the 200 SMA, but rather this 596, 595 area. You can see we have equal highs here. It was also a prior low. If we can take it out, I don't see why Tesla wouldn't come up and test 620, which again is going to coincide with our resistance trend line, in which case I would be watching out for any signs of inverted hammers, any sort of head and shoulders at that area to potentially fade for a move lower. Again, this resistance trend line has been intact and acting strongly for quite some time now, and I would suspect that on the first touch, once again, we get a bit of a bearish reaction. Now, say Tesla doesn't stop, say the Qs rip up towards that upper balance range that we've discussed, your next target on Tesla would be the 50 SMA and up towards our 667.53. And again, Tesla can be a mover. Keep in mind some of these ranges from back in here. Some of these green days, when it gets on a grind, it really just goes. So it's not like that's off the table for the upcoming week of trade. To the downside, again, probably not really favoring shorts on Tesla until we get into this gap. There is a small gap that I did not map out, but if we take out Thursday's low, which is going to be here around 571.50, if we take that out, look for the gap fill to about, what is that? 566.71. Okay, so very, very small gap, but that would potentially be the downside trade early on in the week if we take out Thursday's low. After that, you're looking at the low of the week, sort of coinciding right around that 545, 540 critical area of support from the head of the inverted head and shoulders from in here. That would be the downside target. And as it sits, it's not really giving us a clear idea of what that direction may be. Very choppy action over the past week and a half. Alibaba continues to be a train wreck here. It looked like it was going to fill the gap. Remember, at some point in time, as a matter of fact, headed into Friday, right, we had this. This was the gap, right? On Thursday, we got a strong close in the gap, and we would have expected the gap to fill, but instead we faded back down towards these lows. So as the chart currently sits, again, choppy just like everything else, looking for a short on BABA actually underneath this little flush point that we've built at 209.92, call it 210 the whole dollar. If that flushes, just look out for a low here around 205.86. After that, again, this was sort of in the middle of this overall range, but if that were to give, your next support underneath is at 197.01. Clearly, this one is in a longer term or medium term downtrend. We have the 50 and the 200 SMA both sloping downwards. So not really favoring upside, but if we were, gap fill is obviously the first target, but looking for any weakness, just like Tesla, against the resistance trend line and 50 SMA here in Alibaba. So Facebook looks okay to me, whereas the majority of other things are kind of more sideways. This is clearly exhibiting some higher lows and trying to make higher highs without giving up too much of its most recent sort of uptrend move here, right? So Facebook looking decent. As long as we hold on to that 315 here, I think it looks good to potentially move back into the gap up range from here. And, sure, we've talked about overhead supply, but because of the nature of this uptrend here, I wouldn't really, put too much weight into this being sellers here looking to get out break even. So as long as the rest of the market, the QQQ especially, resolves that 326 area, I would expect Facebook to resolve the 314, 315 area higher, and again, move into that gap up range. So over 321, you're looking for longs up towards the all-time high at 331.81 to be exact, based on this bubble here. To the downside, probably going to be a buyer on any pullbacks to the support trend line. Not really a fan of how the close proximity that would be if it were to happen early on in the week, but it is a potential area to get long on Facebook. One thing I will point out here is our resistance trend line, something like this, has broken, just like we talked about in SPY. It's going to be a matter of, do we hold above it now or do we fail back down below? The support trend line is well intact. The 50 SMA is upsloping here on Facebook, so a little bit more trend to play off of as opposed to many of our other things. Now, overall, don't get me wrong, it really hasn't moved much in this overall box, and we are technically still at the middle end of the range, but favoring longs based on the overall more apparent trend here in Facebook as opposed to any of our other companies we've talked about so far. Moving over to NVIDIA, and this one gave us a couple of gaps this week. So not only did we have I think it was the stock split news, right? That sent it higher, and the market gapping up that also sent it higher here for this gap from Wednesday into Thursday. So all things considered, I think the stock split, it will be a 4-to-1. I think that'll be healthy for NVIDIA because at these prices, and just look at the volume over here, right? Obviously it's increased because of the news and catalyst here. But if you just think about this representing 16 million, I mean, traditionally, it's not nearly trading that much volume. So I think a cheaper stock price will bring more volume to the stock, which will make it trade smoother and will be better for the options market. So a good thing, the 4-to-1 split. In terms of what it's going to do this upcoming week, kind of a hit or miss, right? For me, it did break the resistance trend line. We had something like this. It broke obviously on the gap up, but the gap faded, right? So now it's a question of, does this gap fill or does it hold? If it holds, I would just watch out for sideways choppy action in anticipation of earnings, which is Wednesday, right? And potentially a break higher on, the good news of the 4-to-1 stock split. Maybe people are anticipating good earnings. Again, I would never recommend that you play them outright with options, but up could be the direction if people have a positive sentiment about earnings and the catalyst of the 4-to-1 split here on NVIDIA. If we see a negative reaction, obviously you're just looking for the gaps to fill. So under 594.50, we'll call it, fills down to 586 or 587 the whole dollar, just using some rounding here. 50 SMA is at the top of our next gap, 570.86 down to 563.07. And again, based on the extended nature, probably want to see it hold sideways here into earnings, potentially go higher after that. Good thing we have the 4-to-1 split. Probably won't be trading it in the earlier parts of this upcoming week. So Microsoft has a clear breakout level here, just like we kind of had in Apple. It's over this 248 whole dollar. We're looking to trade up higher towards 250, I would say the psychological number. And then just use your sort of y-axis here. 252 makes sense. This was a prior area of congestion and saw two areas of resistance as well as support. And then, of course, 254.25 would be the next major area up here. That's the bull case for Microsoft, I believe, into the upcoming week. If it goes higher, do know that there is the gap above, but is that likely to fill? I'm not entirely convinced, especially again with the choppy action here. We do technically have a higher low, which is a bullish thing. We've left this gap unfilled. And again, if the sellers were strong, they probably would have filled that gap on Friday. Excuse my voice, which is kind of going there. To the downside, right? Only looking for a gap fill short play. So if we take out 243.87, looking for the quick short down to 243.21, not a whole lot of meat on the bone, but just based on it being a low liquidity area, that would be the only short I'm interested in. Potentially hold it for continuation after that, but really that would be the first target there. To the downside, again, not looking for this, but if it were to go lower, 238 is kind of the line in the sand for the upcoming week in Microsoft. Last but not least, the beast, we have Amazon, and this one is exhibiting some pretty sloppy price action around the 50 and 200 SMAs. So I would kind of hold off in terms of higher conviction plays on this one until we get the short underneath 31.32, in which case you can see there's some decent room to run all the way down to 30.28, or the long above the 2-day highs here for a scalp up towards our 33.09, 33.10 area on the chart. After that, again, a little more room to run here towards 34.30, but with the choppy price action, with having a tough time resolving those moving averages, I'm not entirely convinced that we're just going to miraculously make a run for that level all the way up there. So as it sits, really placing a lot of emphasis on this potential setup here, 3-day flush point, and a quick scalp over that 32.50 mark. Quick reminder before we get into these trade ideas is that at 10,000 subscribers, we are doing a course giveaway. So if you want to be involved in that, definitely subscribe. The sooner we get there, the sooner we can give away a couple of seats to the course. It's lifetime membership, no matter how you get it, whether it's giveaway or you purchase it on your own. If you're interested in learning more about it, definitely check out the link down below in the description. Jumping right into our trade ideas now, talking about Uber first, clear pressure cooker top here on the daily time frame, right at $50, the round psychological number. If we take that out, there is technically a little bit of gap left to fill up to about 50.60, but after that, I'd really be focusing on this sort of area of resistance right around 52.50 because here you'll notice pretty poor structure to the downside, right? So we should travel through that with some relative ease before we get into some prior stronger market structure. So $2.50 move available over the pressure cooker top here in Uber. To the downside, I would sort of lose interest in this trade idea if we were to give up the 200 SMA clearly through price. Now, I would stay interested if we respected it and consolidated further into this range, built out the pressure cooker top a little bit more at 50, definitely interested in that break for the move higher. Next up, we have Morgan Stanley. And I was chatting with a newer Discord member about this one extensively, and he brought up a great point, right? So not only is it a clear pressure cooker top here at the highs, but it's 52-week highs, right? So anyone who has a 52-week high scanner may be getting involved on that breakout. So that's two parties of buyers getting involved to send prices higher. Potential target in this one, again, for day trades, I'd be watching out for at least 90, probably traded up towards 92. If you're a swing trader, again, the trend here is rather strong, so you could do it on something in the financial space. Who's to say that it couldn't necessarily go up to about 95 over the course of a week after consolidating in a nice little range here? The other thing I like about this, right, technically speaking, we have a support trend line as well. So using that as sort of a gauge of whether or not we should remain in the trade or not, if it starts to happen, could be a good thing. I would still be interested in the trade if we break it sideways through time, sort of not interested in the trade if we break it lower through price. Another thing about Morgan Stanley and the financial space in general is that as inflation talks start to hit the headlines, raising rates could definitely help out the banks and be another catalyst that pushes this one higher. So MS is certainly one of my top watches headed into the upcoming week. Next up, we have Roblox, and this one is a newer IPO, right? But what we're seeing is it's taking out the strong area of resistance that it had on the initial drive higher after, the IPO, literally that same week, right? So as it starts to accept above, we're just looking at longs headed into blue sky territories. So strong volume is really what had me interested in this one. It looked like there was a lot of buying going on Friday, just a strong grind higher higher, and then it consolidated and pretty much held in the upper third of the range throughout the entire day. So watching Roblox to hold about 80, which is about 50% of this range here, as long as it consolidates and holds above there, looking for higher in Roblox into the foreseeable future. Next up, we have NEM for Newmont, and perfect daily bull flag. I mean, it doesn't get any better than this in terms of, being picture perfect, respecting the support, and we have highs like so. So if this one were to take out, let's put a level to this, our 74.50 we'll call it. We do have the fake breakout high to contend with at 75.31, but just based on the nature of it holding, if we just draw in our range, I'm a fan of thirds, there's the large candle, right, range. If we draw that into thirds, there's your thirds. We're clearly consolidating in the upper third and respecting that. As long as we hold it, I would say as long as we hold 50% of that range, I would still be interested in taking this trade long over the highs here around 74.50. Not so interested if we come down to the 50% of the range and continue lower, right? If we come down and support, sure, still interested. If we come down and go lower, do something like that, not as interested in this trade here on NEM. Next up, we have Lemonade. And Lemonade is a perfect back test here of a prior support. I mean, look at how this one is another picture perfect setup, right? Touch, 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 and now back testing with a small doji candle there on Friday's action. If we were to form any sort of inverted hammer, basically something like this, maybe a head and shoulders up around this area, a bear flag off the open on Monday, just looking for a quick scalp to the downside here, given that we are back testing a very critical area of prior support, just market structure, right? Very simple here, a back test of prior support. Next up, we have BA for Boeing Airlines, and this is a great trade simply based on the fact that it's breaking a longer-term downtrend resistance line, and we actually moved higher above a prior flush. So there was the prior flush point, and if we draw in our resistance trend line as such here, you'll notice that we gapped up over the prior support flush point and the resistance trend line. So as it sits, looking for longs over Friday's high to trade up towards that 50 SMA, which is going to coincide nicely with a pivot high from in here. Just to map out put a number to it rather, just to give you an idea, that's right around 244.40. Conservative would be right around 243, the whole dollar here in BA. To the downside, not really interested in the trade if we roll over and start to accept back down below our 232.30 mark. Last trade idea here is on CLF for Cliffs, and if we zoom in, what you'll notice about the most recent price action is, well, first of all, it is in a strong daily uptrend, right? 200 and 50 are stacked perfectly with good distance separating the two. The other thing is that we have a support trend line just like this. So let's map that one out, put it on the chart permanently here, and we're definitely interested in the dead cat bounce here, right? We have a number of things working for us. We have the 50 SMA. We also set a new higher high. So because of that, I would be looking for at least a little bit of a bounce here at the support trend line. It's something that should work early on in the week. So Monday or Tuesday, if we form a early bull flag on Monday, right, something like this on a 5-minute chart, consolidate in this range, definitely have some more confidence in going along there, knowing that you're at support trend line, 50 SMA, coming off of a new higher high. So that's going to wrap up the trade ideas for this upcoming week. If you learned anything new during this entire video, let me know in a comment down below or by simply leaving the video a thumbs up. Again, trying to hit 10K subs, very cool YouTube milestone. And with that, I wish you all a green trading week.